the law of supply and demand apply to trading the financial markets?
I can't think of an example where supply and demand doesn't apply more brilliantly than in financial markets. It always makes me laugh when people get upset that people have other market participants have different views than they do. Well, for every buyer there is a seller. That's how it works, and therefore you should expect other people to have different views from you. It should be good that other people have different views from you, because if everyone has the same view, you can't get out of a position. So I think financial markets are probably one of the best examples where supply and demand is absolutely key. It's why so many investment banks look at who's buying what, and look at bond markets. Who's buying bonds, where are the bond buyers coming from, how much issuance are there in bonds, who's issuing, which governments are issuing this week. It's the reason why analysts look at this data so very much.
Do you favour fundamental analysis or technicals?
Well, clearly I was trained as a fundamental analysis, in fundamental analysis. I mean, I do look at charts as well, but I often joke with my chartist friends that charts are for sailors, not for finance. And in fact, one of the richest chartists I know, I have to note, has made his money from selling his software to other people rather than investing in his own ideas. So if chartists were so great and they were so great at making money, why are they giving you their ideas? That's always my concern. My fundamental belief is that very few people create alpha. Very, very few. I think costs are the most important thing in your investment decisions. And I think you should put 90% of your money away in passive funds as cheaply as possible. I'm a great believer in equities for the long term, and most people's investment horizons are very long term, multi-decades. If you want to play the markets, then do it with 10% of your wealth. Don't expect to become a multi-millionaire overnight. You can do it you can create your own rule. You can do it on fundamentals. You can do it on charts, however you want to do it. Create your own rules and have fun. But don't expect to become a multi-millionaire overnight. And if you do become a multi-millionaire overnight, it's probably just statistical chance. You got lucky. There is a right-hand tail of a normal distribution and you hit it. Be thankful, take your cash, and don't keep investing it, because you might end up on the bottom left-hand side of the normal distribution.
Trading times, news time, markets open, close. Talk a bit about that.
Even the professionals do not like trading at the market open, at the market close. It's very, very choppy trading. Traders in banks really dislike having to make a market an hour after a company's released their results, because the analyst upstairs will have 100 pages of numbers to go through, and will be trying to desperately go through the numbers before he calls the trader and says, oh, they're better than expected, they're worse than expected. Horrendous trying to understand detailed, complicated stuff coming out and instantly having to make a market on it. Unless you are mathematically brilliant and can predict these moves, I would suggest it's a very risky way to trade. But you may thrive on risk, love the adrenaline, and want to play that game. I doubt it will make you money though.